Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Overnight, the Australian dollar takes another upward step and now poses a threat towards 61.25. Although the level has been challenged and respected, I will like to say that from a call of an error of judgment that could see a squeeze above this level to 61.7080. Although from the bearish outside range day and the confirmation, I am in line to say that the market should continue on its bearish trek and look towards 58.85.90 as a target. In the meantime though, let's see how the market does play out towards that level of 61.25 as we have later today the RBA rate decision. It is assessed that the market will see the RBA keep their rates on hold at 0.25%. However, there could be some fireworks from the accompanying statement, which should give further insight into what the RBA is thinking. On March the 3rd, the RBA cut rates from 0.75 to 0.50, and then in less than 2 weeks later, on 19th of March, the RBA cut rates again in an emergency meeting to 0.25% to combat, that is, the negative economic effects from the coronavirus. Overnight, the euro hasn't really made any significant moves and still idles around the level of 108. I do anticipate that there's still room for a move down and therefore could initially see a challenge towards the target of 106.60.80 before any rebound, where I've highlighted here. Although the market will be paying a very close watch to this Thursday's initial jobless claims report, as at the moment the forecast holds around 5 million claims, which is a big number. Still, with the market last week on Friday, the much larger than expected contraction of the non-farm payrolls number, the dollar index didn't really shake up too much of a fuss regarding that the US economy lost 701,000 jobs in March. However, I still hold the bearish view for the euro, and let's see if it does head towards the downside, with the resistance seen at this stage around 108.55. But after the challenge to the upside, the resistance held very much in respect to 109.35.45 after posting a brief high of 109.26 this morning. I do anticipate that further weakness may come into play, and from the technical aspect, and also if we are seeing a rejection from 109.35.45, then I am looking towards 108.45 and lower, eventually towards the bottom side of the range around 105 to 106. Little to add to the pound at the moment, as I still remain neutral due to the continuous high market volatility, and also the risk of trading remains to the aspect of high risk because of the market conditions. As I'm holding a neutral view, it was reported overnight that Prime Minister Boris Johnson, enters intensive care due to the persistent symptoms he's suffering with the coronavirus. But from a technical point, unless we get a break of 121.70, then my view will hold down towards 121 to about 120.5. Or the top side, I would entertain a bearish view from around 126.70 to 127.45. Other than that, I'm not going to get caught up in this noise, so I'd rather refrain from any call. It would seem finally that we're seeing a bit of a breakdown in dollar CAD, and we are looking now towards the target, which I'm still holding at 139 figure 30. It is assessed that from there we could see a break and therefore look towards 136. Let's see if the market first of all takes the challenge to 139 and see what the outcome is, as the technical implications are bearish. The break of 1,648 triggered a rally for gold up to a high of 1,669 overnight. This has now given some clearance to the upside after the 3.5% rally, but nevertheless the market has shown a little bit of weakness into the opening of Asia today. But the support, as I mentioned before, are pretty much deep due to the length of these candles, especially after yesterday. The support comes in at 48.56 and then sees little support until 26 to 32. So again, we can see that the market is still very much holding in very wide swings. But if we do see a rejection from 48, which was the break level, then we could see a rally back to the top side of this range, which is around the beginning of March of 1,700. Reassess from there. Well, after looking at the hourly chart, you can see that oil rallied back to fill the gap, dropped back, now rallied again. As the market waits to see if the meeting between the two powers of Russia and Saudi Arabia when it comes to the oil titans. Now the market at this stage is still looking towards the top side of that level, around 30 to about 31 and a quarter. If we see a break above there, then I do expect to see further rally and fill this gap, eventually up to 41. But the immediate target, that is from 31.45 break, is $36 a barrel. Any pullback views support quite deep, around $25 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new day.